Vanakkam and good evening. So it's really nice to have a presentation now with the panel. So before going to them, thanks to Elets for giving this opportunity to present, because customer support and customer services related to customer means it will be really interesting. It should be interesting. When you think about normally NBFC, why a customer has to come to NBFC when there are so many banks available where they get a attractive interest for them to get things done for his requirements. Still, why they have to come to NBFC? Two things. One is that NBFC ensures that the turnaround time to disburse the funds will be ease comparing to the banking. Now banking is very aggressive, so NBFCs has to be double aggressive to them, comparing to them. That is one. And second is that on the loan getting sanctioned, where banks and all has certain parameters where the person may get rejected, but whereas NBFC does, with one side is on this risk part, they handle it, how to make the loan also to make it success and reduce the NPA part also. So here, what plays a major role? Comparing to the earlier, now the things got changed and now it moves towards digital and also on the technology part. When technology is in place, when technology is getting involved on these things, one is reducing the turnaround time for the process and ensuring that the amount is given for the deserved person on time, and also properly ensuring that there is less percentage or even nil NPA also for our organization. So technology can really help here. So to discuss this in detail, I would like to introduce the panelist here. One, Dhanasekaran is the CTO for Belstar Finance. So here it's a mixed gathering. One from the solution provider, one a technology person who is the CTO, and other person is the partner for the business. So three level of persons are there, and it will be, I 100% feel that it will be very interesting, and I want your participation also to ask if you find out any questions where you have in your mind. Please free to ask during the end of this panel. So, Mr. Padmanabhan Balasubramanian, partner of Protium Finance, welcome, sir. And Vamsi Yeluri is the CEO of Nuacem AI. So, AI is now you are kept, or from the starting elders AI? Because it's the buzzword. AI is a thing where, especially on the finance companies and where the disbursement happens more on the AI, and a lot of things where we are bringing AI in this. So good that Vamsi has thought earlier and made his company as Nuacem AI. That's really a good site. So before we go to the presentation, I would like from each and every one to tell about your organization and what is the new initiative which you are planning predominantly on the technology part. It will be good. Maybe first I will ask from Padmanabhan from your side.
Thank you. Thanks for the opportunity to be here, everyone. So Protium Finance Limited is the company that we founded about 5 years ago. Its existence on paper is about 4 years. And we have been an active lender in small businesses throughout the 4 years that we have been here. And we do a little bit of consumer, but mostly small business lending, secured and unsecured. We have about 100 odd branches, and the last financials that we filed was about close to 3,000 crores of AUM in 3 years that we have built. It is one of the largest greenfield NBFC in the last few years in India. So that's what we do. In terms of technology initiatives, I think we have two key initiatives. One is, unlike other NBFCs, we build our own stack from day one, which gave us an edge because we were able to pivot to various products faster. And we launched Micro Lab, Large Ticket Lab, business loans, digital business loans, invoice-based financing, consumer. We are behind one of the largest OEMs in India for mobile phones. So that gave us a platform which allows us to go across the spectrum to serve small businesses and consumers. And one of the initiatives now is to take part of a technology and actually externalize it. That's something that we are quite keen on doing. But within our company itself, the key areas of digitalization is post-sanction. Like once you've sanctioned the loan, how can you bring in digitalization to get the loan out to the consumers, especially tier 2 consumers in India who are pledging their property? Like how can you bring digital process to that? That's what we are focused on.
Thank you. My name is Dhanasekaran and I'm the Chief Technology Officer in Belstar Microfinance. And we are a microfinance NBFC. We operate in 18 states across pan-India with 1,100 branches. We primarily lend to self-help group as well as JLG group women members. And so far we have more than 25 lakhs active customers. And recently we crossed 7,000 crores AUM.
Hey everyone, my name is Vamsi and I represent an organization by name Nuacem. I'm also a chief evangelist for another organization which is present here, which is Smartping. So Smartping is into telecom and we are also into communication AI, a lot of areas where enterprises have this engaging conversations with the customers, the end customers. So we offer conversational AI, generative AI. So this recent trend of generative AI obviously is being adopted across different industries, and I think we are one of the front runners with respect to how we can kind of enable this capability for the different segments, be it the banking financial services, which you're part of already, or any other. We are a cross-domain company, so we have these abilities to kind of work with different segments and build these innovative solutions for them. So yeah, pretty much I think once we start off the discussion, we'll get into the modalities of how we do it and what are the benefits of it. But yeah, I'll hand over this to Sendil and then we'll start off it. Thank you.
Yeah. Thanks, Vamsi. So when we tell about the finance companies and also we wanted to lend to a proper right person. See, many times it can go to a wrong person where he need not even require a finance, and also already he would be having a certain he would have purchased a certain product from one company, and we want to see how his credit score, all those things. No, that is one part. And second is that as the finance company has to reach to the right person, how can we customize and give a loan in such a way that targeting a right person can help the business also to grow instead of I'm just telling in a simple way, means a campaign. When a campaigning is happening, how it is turning to be a success and what type of success it will be. Like if I am campaigning for a certain number of percentage of the customers, what is the real turnout happening in that? It is so we have to reach to the right person and also the person whom needed that. It can't be a wrong set of persons. So here technology plays a major role. Maybe from Dhanasekaran, whether from you are into a micro finance company, right?
Yes.
So the reach should be in such a way that the deserved person, they should get it. So how are you planning that?
Yeah, absolutely, you are right, Sendil. When we talk about the customer-centric, usually we talk about the sales, numbers, and selling the product to the customer. But recently only the shift is moving to talk about the technology. Why the shift is happening? And because of the tech-savvy customers. It's thanks to 4G and then efficient, better Android devices. Nowadays, all our customers, irrespective of the sectors, even microfinance customers and all, they have access to wide variety of digital services products. They consume entertainment through phones, and they do e-shopping, e-commerce. So when they use and consume these services from the global players, and they try to approach any domestic businesses like us, they come with that kind of a higher expectation, and then they expect a similar services and associated products from us. So it is where technology comes and then helps the organization as well as the customer. So as a technology leader, I am seeing this is a very, very positive trend. What we do in Belstar is we have a lot of tons of data, terabytes. So we analyze the data and try to identify what could be the customer need. So various patterns, how they make the credit inquiry, and we have various data pointers coming from the bureau and their existing relationship with us, and how they operate with the fellow borrowers, or because we deal with a self-help group, so their relationship between the other members. So these are the data which helps us to analyze and recommend various products, services to customers as well as our field officers, because identification of their products is one spectrum, and then delivering those products or making sure that these products are available for those customers and then notifying to the sales officer is the another key. So that is where the technologies helps. Customer applications where we can able to notify the eligible products, or otherwise when our sales officer servicing the customer at their doorsteps, again we can able to inform them. So okay, this customer potentially may require, or otherwise may not require. So these are the things we can able to identify using the data pointers, and then throw as the insights to our field officer.
So Padmanabhan, here you are concentrating more on the SME business. So SME is one segment where many finance companies wants to come in, because one is that it is I feel that it is an untapped or a sector where there is a lot of growth. So in this scenario, how your organization is trying to reach the customers, and also what type of customers you try to give the loan, or how you can lend it, being a partner, as the operation is on one side and technology is also on the other side. How you feel that you want to exactly target the right customer?
Right. So I'll answer this in two parts. There's a technology part, which the team in Protium, we've built it. And I think it is becoming industry standard, where you can reach the customer through digital channels. We can get them to sign documents, give information. So the digital infrastructure of the company is allowing me to know the customer very quickly. That part I think is taken care of. And if any company in this age does not have this, I think they are going to slowly fall off the cliff. So I think that's like a table stake right now. But if you have to talk about customer experience in lending, it's very different than most other industries. If you're selling products to people in other industries, the CRM or customer engagement is to keep selling more and more stuff. In lending, I think at some point you should stop selling, to be honest, right? Because you know that the next loan is the one that is going to push the customer beyond the default. So trying to be the last person to lend the customer is probably not the best thing you can do. So the CRM problems in lending is actually different than CRM problems in other places. So if you're selling watches, it's okay. You can keep on selling more and more watches. But if I'm a lender, am I going to keep selling more and more loans? I think there is a point where you have to stop. So how do you know that? That's where I think the CRM for lending is different than most CRMs out there for customer facing products. Here the CRM should be able to get a risk embedded into it, which means you should be able to say that the next loan that you're going to give to the customer is actually going to create indebtedness which is beyond what the customer can bear. You have to have that in your CRM. And you also have to say that if you're going to give the next loan, it is better for that person to take that money and prepay some loans, because that loan is actually going to consolidate the debt. So if you are constantly thinking about customer in lending, you have to worry about customer's balance sheet, not customer's loan. And I think that's where we think we have an edge, because we do secured, we do unsecured. So we do a large spectrum of loans. We don't do gold loans, but these two products is quite a large part of SMEs lending, both secured and unsecured. So it gives us an edge to say that at this point you should move to a secured loan, don't do more unsecured. At this point you have exhausted the secured loan, so maybe you can get a little bit of unsecured loan, and it gives us the edge to target the customers in that way.
Really interesting. Vamsi, I think you heard about two type of business and microfinance and also MSC. From your side, whether the technology can help in such a way that the business can be eased by giving a loan to a right person, whether the AI tools or if a tool which is being deployed, can it check the health of the customer and also the database what the organization has? How is that, if yes, how from your organization, or what is the product which you handle here?
So I think the answer would definitely be an yes. Okay, given that the way the technology is evolving and the trends which we are seeing already, right? So and the way the businesses are using technology. So just to kind of extend on what Paddy was mentioning about, stop giving or stop selling loans to the customers, because there's a risk element pretty much attached there, right? Now he just pointed saying that it's not the CRM which will give you the profiling information of the customer or the risk profiling information. It's the CDP which gives you the risk profiling. CDP is customer data profiling, the entire parameters which decide whether the customer is kind of ready to kind of be eligible to kind of take that loan or to be given a loan, right? So I think from a tech standpoint, it's not just the CRM. There should be an extension to that, and which will help the organizations, the institutions to decide better whether the customer is really capable to pay back. Because after giving out the loan, right, the collection process is a painful thing if there is a delinquency coming into picture, right? So there are a lot of checks and balances which are kind of handled by technology, obviously, and the digital channels which the customers are today leveraging, right? It can be WhatsApps of the world, or it can be Facebooks, or it can be anything for that matter. I think one thing which we from a company standpoint, or we from a platform standpoint do is we do a lot of communication services, right? And those communication services are not just blind communication services. We add a lot of niche tech or niche innovative approaches to that. So for example, if somebody has to do a collection, right? Or an asset reconstruction company. So if there is a delinquency and if there is an NPA, what you do is you plain vanilla hand it over to a asset reconstruction company. So they have a different way to handle the collection process compared to what NBFC or a bank has, right? So there are technologies which are kind of helping in every step of organization, from starting from the loan origination or from the origination point to the disbursement to the collection. So most of the time AI is one good spot where people can kind of take up AI and do a lot of analysis. These days, a lot of data is getting generated using the data analytics tools combined with the algorithms which are kind of AI ML driven. I think fundamentally there has been a shift in how you pursue the risk of a customer and how you deal with that particular customer. That is obvious. And then coming to us, how we do it is, today there are multiple NBFCs which are kind of running on our platform. So I'm just giving an example. These NBFCs have different processes which are being handled, right? Starting from onboarding of the customer, where there is digital KYCs coming into picture, video KYCs, CKYCs, everything is onboarded in a very automated fashion. There is no intervention of human. Most of the time, it helps in cutting down on your processing time, because NBFCs have to be very aggressive. You mentioned that point that we have to decide fast whether the loan provisioning is possible or not, right? So these digital apps or digital processes which can kind of cut down on your processing time and your loan disbursement times are very important in the days to support your businesses, especially NBFCs. And as part of our delivery, we do a lot of solution building around this, starting from onboarding to disbursement to collection. Even when the loan falls into a delinquency area, when it is an NPS, following up with them. Even we work with asset reconstruction companies to kind of build solutions, and everywhere it is tech, end of the day, right? You depending on a human, I think with the scale the businesses are growing, it is not possible to have a lot of people deployed and get this done. And tech can scale to any extent, not the human capability, right? Especially on the areas which are broadly process driven, which are broadly compliance governed and all that. So I think from a standpoint that tech is playing its part, yes, definitely very intensive amount of innovation is happening, no doubt about it. Because if someone who's an aspiring NBFC, so Paddy's team itself is developing tech in-house. So there's a lot of emphasis on tech, end of the day, right? And a lot of NBFCs which are sitting here, you all work with a lot of partners or outsourced partners who kind of give you different solutions. In fact, we have seen multiple presentations during the day. So tech is something which will grow, which will be very fast, and AI, ML, and generative AI coming into picture. So these are all very interesting technologies to work with. At the same time, there's a huge value generation which can happen. And I think it is like in the next 3 to 5 years, the entire process, right, how we are kind of depending on multiple touch points, this is going to completely transform. So I would say that tech is something which more and more you guys have to adopt. And because there was some point earlier I was hearing about traditional NBFCs, they are still catching up, right? But I think that catching up will be very aggressive, no doubt about it, given the availability of resources and also the ability to scale. It is very important because these days Paddy can grow fast compared to a traditional company, because we see that even the smaller organizations are growing fast. They are leveraging a lot of tech. I'm not saying that traditional NBFCs or any organizations, it will be a roadblock kind of a thing or something, but they're transforming. That's the digital transformation which most of the organizations are adapting, right?
Yeah. See, when you told the right question about the traditional company and also the fintech companies or the companies who are born on cloud solution. So
Correct.
One is that the legacy architecture has to get changed in such a way that to go with the services like a multi microservices type of architecture, so that for them the business also will get changed accordingly. So organizations who are all wanted to aggressively to improve, definitely technology plays a role. See, when we compare about Shriram, we are one of the leading NBFC, and we are the largest NBFC in the country. And we are predominantly into truck financing. But what we are trying to do is that through we are understanding the customer's pulse. We wanted a customer in such a way that he's a truck driver. We are not just like that giving a truck loan. We are going beyond that. The guy who is traveling from one location to other location, let us give him a fuel loan. So we make like a current account for him, because he's a truck driver, he can't have a cash, and there are chances that he may not have a internet connection also. His poor connection, because still on the highways if we want to go for a fuel. So we are giving him a top-up loan. So this guy, when he goes to a fuel station and he wants to fill up fuel, just he can tell that his mobile number there ends. So the fuel station guy search the application and sees that whether he is having a top-up loan. And if it is there, so ensure that a OTP is triggered to him. So for OTP, it is just a SMS is enough, right? So even he can have a feature phone and immediately he'll get a OTP. So with that particular amount, so if it tells that the fuel is given, so he's not worried about that. And whenever he needed, he can use it. So we are giving him that. And next, when he goes to he needs to change the tire. So you can go to a company like MRF, Apollo. So we are going in such a way that the customer, a good customer, has all these facilities. Whenever needed, he can use, or if needed, he can try that. So these type of things which we are making through technology to make his journey easy. So why again I'm telling here is that, again, if an organization, if they are building a proper technology and also the right technology for the business, one technology can't be equivalent across all finance companies. Finance companies, maybe bank, they have a common application, or there are certain 3 or 4 companies who develop the application. The core application will be the same. But finance company, Paddy will be running one type of business, whereas Shriram will be doing another type of business. So these type of business, the application plays a major role. So Dhana, coming back to you, when we were telling about data and other things, how is the security being handled, the data? Now, today, I think today or tomorrow in Parliament, the Digital Personal Data Protection Act will get passed. More or less it will be passed. All bills are getting passed easily. So tomorrow this bill also will get passed. In this scenario, how is that the data which you are taking care? And second is that you are into microfinance. So data has to be properly being utilized. So how is that you are planning, and anything where the time is limit, maybe in a minute, if you can tell, it will be good.
Okay. See, we are even though we are a microfinance company, we are a cloud native company. All our servers are in cloud. So primarily the data is in 2 states. One is the data at rest, the data at motion. So one way what we are doing is we are ensuring no data are not stored in any of the client devices. All are stored in the cloud. So that way we ensure that the data at rest is taken care. And again, data at the motion. So again, we are using various encryptions and then tunneling methods to protect that also. So when everything is moved to cloud, we are putting up the additional standard IT security and then cyber security protocols like deploying firewalls, WAF, and all these solutions. So just I am covering at the high level considering the short timing.
From your side, when you are allocating the budget, you should be one of the person who will be, as you are handling technology also. Is the security is killing your budget, or you feel that 1% I am using for application and other percentage I have to ensure that the security, if my data moves away to the wrong hands, how is that you feel as a partner for your organization? Is it troubling you, or you feel that you have to invest equivalent there and make your life easy? How is that you are doing it?
Okay. So I think we have a lucky start because we started a little late. So any new company that comes will have a better technology because clouds evolved, all the technologies are evolved. So we have some advantage because we are new, right? And when we built our product in the cloud, we had the luxury of creating perimeters around each application. The generation before had to create one large cloud account and create all the applications. So they moved on-prem to cloud. We had the advantage of breaking cloud into micro accounts. So each of my business runs in a different account. So if I am vulnerable in one business, we can technically shut it down. or some services runs in a different account. So our KYC services might run in a different account. We have vendor partnership that runs in a different account. And if there is vulnerability in the vendor, we might be able to shut down that account. So I think as the architecture of cloud evolves, new players have a slight advantage. And pretty soon we will have the disadvantage of being an old player. So we have to invest not in security, but the architecture. Can we move the architecture to be more and more secure, where the perimeter is very well controlled, where keys are managed properly inside, outside, and stuff like that. So I think that's where our focus is, not make it a cost of security, but cost of building software.
That's an integrated cost, obviously, given that the depth of the application from an architecture standpoint, right? You have to make sure not the application alone, but the underlying architecture is scalable and robust from a security standpoint. Because tomorrow there are 10 services today, he'll add in 5 more, then your security should not be compromised because he's just plugging in
You
something.
also manage multiple companies, right?
Absolutely,
So then you will be having a lot of audits from
So-
multiple
So
companies.
I think that is again a hierarchical structure which will bring in the core competency from a security standpoint. But yes, the risk is doubling up the moment you start up a new company or add in the new component. So you have to ensure that there is a elasticity component built into the security so that it kind of traverses across, not just limiting to one particular aspect of what you're doing actually.
Maybe I'll just make one last point. And
please.
this is what allows us to externalize. So we are an NBFC, but we could have made something very well. And if that component is valuable for some other person, this micro account architecture allows us to give it. And this is how we have been externalizing our software. Because
He'll
often
scale
people,
as you grow, you'll scale about it, and that makes your life more easy.
It's really nice to know this. Anyway, time is up, but still, maybe 1 or 2 questions from audience. If anything is there, we are ready to answer.
The 3,000 crore AUM you have built in 4 years. Very inspiring. Few lines about how you have done that in just 3 to 4 years.
I think NBFC job is 99% perspiration, 1% inspiration. So I think that should answer what we had to do for most of the work. I wish some days it's a technology company where more inspiration is there, but I think this business
Ticket
is...
range is also different, right? From ticket range of the...
Yeah, so we do secured loans from almost 5 lakhs all the way to 3 crores. But there are different methods of underwriting it. We have 100 branches through which we source our own product. And we have direct sourcing agents who give slightly larger ticket loans. And we have digital platforms. We are on 10 to 20 platforms where we were embedded as a lender. And due to digital lending guidelines, we moderated that business given RBI's focus on it. But we used all these combinations of channels to build our business. Most of the leadership comes from a risk background, but has a deep knowledge about India as well. So that allows us to scale the business with the risk as a primary focus, to be honest. And from day one, while we built some products through vendors, we also decided that we have to have the muscle to build our own product in this day and age. So we built the technology team in Bangalore, and I was speaking to Sendil and the co-panelist. If you're building something, someone has to pay for it. Otherwise, you don't know whether you built it the right way. So we think the test of how good you are is often not you, someone else. And we have a few customers who use our products now.
CRM not including, why doesn't it consider the total eligibility customer wise? So this is something in banks which we do normally. We have something called an MPBF, maximum permissible bank finance. Why do the NBFCs not consider this at all during their loan sanction? The general question thing to any one panelist, but this has troubled me for a while. So I just thought, let me ask.
I'm not the right person to answer, but
I'll
I
take
think
a
they
first
want
crack
more
at it.
business.
Guy.
I'll take a first crack at it.
You need more business, Paddy.
So I think to your point, right? Banks have a holistic view of customer because of the product they serve. Like even an NBFC, which has a liability side product for the customers, has a, he said current account. So they always think of customers in a combination of, can I give a account on deposit and a loan, because a loan account will be less risky if I have a deposit account. So from day one, banks have the advantage of that. But NBFC, I think partly because of two things. Maybe they are single product companies and hence they just keep on trying to do that product. Or maybe their risk focus is, I think those are...
None of this suffices.
Huh.
Fact is, we are ignoring this aspect.
Okay.
Yeah.
You think there is a lack
This
of
is-
risk management focus in this?
No,
Or?
in the loan proposal itself, during sanctioning itself, this should be factored in. This
You
ought
mean-
to be factored in to understand the customer profile. What is his total loans? What are his, like a person's salary, suppose, salaried customer, you set aside 40% or 30% based on the profile of the customer, income range of the customer, and then the rest is available for loan financing, loan servicing.
Right.
So it's based on the customer profile, his spending tendencies, where he fits in. So all this needs to be factored in, and formulae need to be, put in place. So a customer has taken 10 loans, and here we are ready to give the 11th loan. Like you said, there is no formula, there is nobody. It's like, we do it out of intuition. It's
Sorry,
not,
Rukmini,
it's
I'm not
calculatable.
sure I agree with you, because
It's
I think a lot of
calculatable.
NBFCs actually look at FOIR. If they don't, then I would like
Agreed,
to
we
short
look
their
at
stocks.
FOIR, we look at FOIR, but that's it.
Yeah,
There's a little more.
I see. Okay.
Yeah, we'll talk.
Okay.
I want to add some more thing. For RBI has come up with a new regulation for MFIs. So which means from a customer's total income, NBFCs or MFIs can lend maximum only 50% of their income. That includes the new loan EMIs obligation also. So that regulation will meet your question.
No, of late RBI is so rigid, and the organization they have certain level of finance companies. One is A company who has asset under management of above 500 crores. They have certain policies, and beyond 1,000 crores they have one. So these are the segment where it is not like that just with the trust or with the known person the loan is given. There are certain policies where even CRISIL rating alone, CIBIL rating alone cannot help the person. Rating alone can help to disburse the loan also. There are other factors where each and every finance company follows certain things. Yeah. Thanks a lot.